my channel. My name is Cindy Sherries, and in today's video we're going to talk about Forex. This is a highly requested video from you guys, but I didn't want to record something that I wasn't sure about. So now that I'm ready, we have to start with the basics. So if you are a beginner in Forex, this is the right video to watch. So welcome to those who are logging in for the first time to my channel, and do subscribe and welcome to the family. So without wasting time, let's go and talk about Forex. The first thing that we need to know, what is Forex? So Forex actually stands for Forex Exchange and is the largest financial market in the world. The trading volume each day is actually 6.6 trillion, guys. And in dollars, that's how big this market is. And then when we talk about globally, we're actually talking about 19.3 quadrillion. London Stock Exchange is actually one of the biggest stock markets in the world. Just for you to understand Forex, say you're going to another country and this is our currency for another country, and then this is my South African rand, and then you can be maybe using USD, but in South Africa we use rand. So say we go to Indonesia, and then this is what they are using in Indonesia, and all you have is your rand. So you actually have to go and look for their currency booth and then exchange your rand into Indonesian money, and then you'll be able to buy. So that's what it's all about. So what people are doing, they're actually making money by exchanging this currency. And please do note that two currencies need to exist for you to even do any trading in Forex. So what is actually traded in Forex? So what is traded in Forex is actually the trading of one currency to another. They're actually trading currency by buying or selling currencies. In order to buy, you need two currencies. For example, you need a dollar and a Japanese yen, and then you'll be able to exchange, or you can even use a dollar and a rand in order for you to do the exchange. And while doing that, that's how these people are actually making money. So let's look at this so that you can understand well. So when you look at this, you will see that I have two currencies. One is USD and the other one is Euro. So the first currency is called the base. The second is called the quote. So what's the definition of these two currencies? It actually means the first one is the first currency appearing in a currency pair quotation, and whereas the second one is a currency pair is the quotation of two different currencies, which the value of one currency being quoted against the other. Now there are 4 trading sessions. So in order for you to trade, you need to know in which country are they awake, in which country are they sleeping. So there are 4 countries which I use, and those countries are Sydney, Tokyo, London, New York. And then when you look at the trading day, it's actually start from 5 p.m. Eastern time, and then the next day is 2 a.m. And then when you look at the Tokyo market open, it actually opens at 7 p.m. and then until 4 a.m. And then the London market opens at 3 a.m. to 12 p.m. And then the New York market opens at 8 a.m. to 5 p.m. So it's important to understand these trading sections. I am now going to show you the currency pairs that exist. Just an example, and also I'm going to show you the top 6 currency pairs that are traded the most in the whole world. So when you look at this, you'll see that we have AUD and USD, and then that's Australian dollar, and then we have GBP and JPY, and then that's the British pound sterling, and then Japanese yen. And then when you look at the next one, you'll see that we have USD and CAD, and then that's the Canadian dollar. And then we also have NZD, USD, and then that's the New Zealand dollar. So the top 6 most traded currency is the US dollar, Euro, Japanese yen, British pound, Canadian dollar, and the Swiss francs. How do the traders know when to buy? It is important to understand these 2 words, and the first one is a fundamental analysis, because they usually analyze to see if it's okay to buy or not okay to buy. And then they use the fundamental analysis and also the technical analysis. So let's just explain what a fundamental analysis. So this one is country specific. It actually looks at the state of the country, like the GDP and how the country is performing, the manufacturing, employment, and whether the president of that country is talking. So these are the things that they actually check, the news of those countries, what's happening in that country. And then when you look at the technical analysis, it actually checks historical data. So for example, what happened, and see certain patterns that used to happen before, and then make a decision on the future trading on what to do. So this technical analysis, it actually goes back to 1800 that's when it actually started. So you do need to understand what it's a fundamental analysis and also a technical analysis in order to make right decision. There are other tools which I use, of which we'll get into detail when we get to the analysis part, when we get to that video which will talk about the analysis part. But for now, just know the two most used technical analysis and fundamental analysis, and these are the methods that I use to analyze the charts. And I'm sure you heard about the charts that exist in Forex. So there's basically 3 charts that exist in Forex. And one is a line, the second one is a bar, and the third one is the candlestick. I'm sure you heard about the candlestick because that's the famous one and it's more user-friendly and the graph is clear. Now let's explain these 3 types of charts so that you can understand what they're all about. So a line chart is actually a line from one closing price to the next closing price. Whereas a bar is a bit more complex, showing opening and closing and the highs and the lows. The vertical bar actually indicates the currency, and the horizontal is the opening price from the left and the closing price right, also called OHLC. The candle chart shows the same info as the bar, but as I said, it is more friendly. And then the middle is called the body, showing the opening edge, and then the stick is actually called the wick, and this one shows the high and the low. Let's go to terminology. There are words which I use and which means different things. For example, what is a pip? What is leverage? What is limit order? What is market order? So I'm now going to go into detail explaining this one. So let's start with what is a pip. A pip is the smallest amount of movement we can see in a currency pair, except the JPY. So how do you identify a pip? So in a decimal number like this, as you can see, it's 1.4524. The fourth number after the decimal point, which is this 4, is actually the number that explains a pip. And then now remember, this is different for a JPY. So only with JPY, it only goes up to 2 decimals, and then that's the number, and then it goes with up to 10. So now let me explain more about understanding a pip. So now let's split 1.4524 so that you can understand. The first value is actually 1, and then the second one is actually the 10, and the third one is actually the 100, and the fourth one is actually the 1000. And then this number is important to understand so that you can know whether the price movement is on the first or actually the 10th or actually the 100th. So what is a leverage? The best way to explain the leverage is actually a real estate. So say you want to buy a house and the price of that house is actually $100,000, and then you only have $20,000. So, and then the bank says bring your deposits, and then what will happen, we'll give you the house for free, but the only rule is when you sell the house, you're actually going to pay the full amount. So if you make profits, it's okay, you benefit, you will pay the full amount and only get the money that you make. So this is what most traders actually struggle with, and they lose most of their money because of leverage. So what happens is, say that house that you bought for $100,000 actually loses value and it is now $50,000. What's going to happen? The bank said you need to pay that $100,000. So you'll actually lose that 50,000 rand and also your deposit of 20,000 rand. But then there's also the good side of leverage. Say for example, the housing market actually goes up and you actually make another $50,000, then it simply means you have 150,000. Then you can pay the bank the 100,000 and then make a profit of 50,000 rand. So leverage comes into that effect. When it comes to trading, it is a similar concept, but the brokers will actually give you the money for leverage, and then after, if you sell, then you have to pay. I hope you now understand what is a leverage. The next one is a margin. So what is a margin? A margin is the amount that the trader needs to put forward in order to open a trade. The next one is what is a market and a limit order. So a market order, you're basically saying I am buying at the current price that it's listed on the market. But then with the limit order, you're actually saying I am buying at the lowest value or at the highest value that you want to specify. So you will have to wait for the limit order to happen, for the money to get to that value, or for the trade to get to that value for you to buy in a limit order. So with markets, that's why most people prefer a market, because then you can just buy and get it over and done. So I hope you now understand the terms that I use in Forex trading. These you need to know, guys. So when is the best time to trade Forex? So maybe to answer this question, I must just say the worst time to trade Forex. So on Sundays, as people are going to church, people are resting, people are not interested in buying or selling trades. So you don't trade on a Sunday. And also during holidays, when people are busy with their things and then you decide to buy and sell on a holiday, people are not there, so the market tends to drop at that time. So do not trade at that time. So usually the best time to trade is 8 a.m. until noon, overlapping the London Stock Exchange and also the New York Stock Exchange. Okay, that's it guys. I hope you now understand the fundamentals and the basics and actually the foundation of Forex trading, because we do need to understand these terms. So I do expect you guys to go and learn these terms, and I will be recording separate videos explaining a peep in detail and how to calculate it and all the other terminologies that I use, and also where to trade and more information on how to trade. I hope you now understand what is Forex, and let's continue. This is a series that will continue, and I'll keep adding more and more videos up until we get to a stage where we are comfortable to deposit our money and actually start trading. And some of these platforms, they actually do offer a demo version where you can practice and practice up until you understand, where you can analyze your charts, where you can use your technical analysis and the fundamental analysis. And one thing that you need to know, traders, they usually stay on news. They wait for a president to speak. For example, in America, when Donald Trump used to speak, they would know what needs to happen at that time. So you did need to watch the whole series in order for you to understand. That's it guys. Thank you so much for watching, and don't forget to subscribe and hit the bell notification so that you can be reminded each and every time I post videos on this channel. Cheers.